Happy New Year to you, and I'm excited to bring you the first market report of the new year. 2022 is an absolutely crazy year for real estate, and many markets are going through some pretty drastic changes. But it's important to note that every market is a little bit different, and Anchorage is no exception. If you want to know what the Anchorage real estate market is doing, and most importantly, the direction that it's headed, then this video is for you. Hi there, for those of you that don't know me, my name is Jon Hill. I'm a realtor here in Anchorage, Alaska, and I help home buyers and sellers just like yourself in the Anchorage and Mat-Su area. Last month, the average sold price for single-family homes in Anchorage Municipality was $455,000, up from the previous month of $446,000, and also up quite a bit from the average sold price in December of 2021 of $420,000. Here's a graph with the sold price for each individual month for the past 2 years with the 12-month moving average overlaid. As you can see, prices in Anchorage are continuing to move up. Often in our market, due to seasonality or a few odd sales, we can see from month to month the prices doing some odd things. However, when looking at the 12-month moving average, we can see that prices in Anchorage are continuing to move up. And currently, the annual rate of change is right at 8%. Now, there's a lot of headlines going around in the news talking about certain real estate markets where we're seeing price declines and all other sorts of things. But the fact is, in the Anchorage market, our prices are still continuing to increase at a rate of 8%. Now let's jump into inventory. December saw an inventory of about 243 single-family homes on the market. Now that is down quite a bit from the previous month of November of 296. But as you can see from this graph, it's typical for inventory to decline going into the winter months, and it typically bottoms out sometime around February when it starts to grow as we move into the spring and summer. Now, if you're able to catch last month's market reports, I know I told you that for the first time we actually saw a sign that inventory might start to be growing. When looking at the 12-month average of inventory, we've seen inventory continue to decline for the past couple of years. But last month was the first month when we actually saw that 12-month average tick up by a little bit. And once again, we saw that 12-month average move up again. But the 243 homes is up from last year's inventory of 223 homes. November's 12-month average for inventory, rounding to the nearest whole home, was 286 homes. And last month in December, our average was 288 homes. So not a huge increase, but it is an increase of a little over 0.5%. And if that trend continues, it's showing that inventory is rising at about 7% a year. Now notice, let's say that we have about 300 homes of inventory on the market, and going up 7% would take us to about 320. So it's not going to be a huge change, but for our market that's been experiencing extremely low inventory that's continued to go down, having 2 months where we've seen the 12-month average go up is definitely a welcoming sign. Moving right along and switching gears to days on market. The average house sold in December of 2022 spent 29 days on market. Last month in November, that number was 30, and December of the previous year was also 29. So we're not seeing a lot of change in the amount of time that it's taking for homes to sell. And when we assess the 12-month moving average, it actually stayed exactly the same from November to December of 22.6 days. So we had seen days on market slowly moving upward for the previous 4 months, and now we're seeing it level back off. Granted, it wasn't a lot of change. The 12-month moving average for days on market bottomed out right at 20 days, and now we've moved up to 22.6. So days on market hasn't moved a lot. I do foresee that starting to move up slightly, just seeing what's happening in the market, but definitely not a lot of change, and it's staying pretty stable. And now let's talk about the biggest change we're seeing in our market, the number of houses being sold. In December, we sold 152 single-family homes. That's down from November when we sold 189. And a year ago, December of 2021, we sold 317 homes. So going from 317 to 152 year over year, we're seeing this huge decrease in the amount of homes being sold. And the 12-month moving average from November to 1 month later in December went from 251 all the way down to 237, which is just about a 5.5-month decrease for the 12-month average from 1 month to the next, which is significant. Here in the graph, we can see that the number of units being sold for the 12-month average peaked just a little less than a year ago, around January and February, and it's continued to go down. Now notice, if we saw a 5.5-month decrease in sales month over month for 12 consecutive months, that would be a 49% decrease in the amount of sales for that given year. Now, obviously, that number isn't sustainable, so I foresee this number having to bottom out soon as people adjust to the new normal market and transactions begin to resume again. But it is showing the amount of change we're seeing in the market after the interest rate increases. and how many people are deciding that it's not really the right time for them to buy or sell. But if you are considering buying or selling, I do think it is a good time, because keep in mind, we're still seeing prices continue to go up. So if you're buying, it's pointing to the fact that you're probably going to have to pay more as time goes on. And if you're thinking about selling, you're still able to get top dollar for your property compared to what you would have been able to sell it previously. And now let's talk about the final topic of months of inventory. December's month of inventory was right at 1.03 months, so just over 1 month. In November, we had 1.18 months. So we're seeing the months of inventory go down, but notice that's to be expected, as we typically see inventory go down in the winter months. The months of inventory is up quite a bit from December of 2021, when we had 0.74 months, or basically 3 weeks of inventory. Now notice why months of inventory is an important metric to keep track of, and not just simply inventory. Because while we are seeing inventory slightly go up, as discussed, at 7%, months of inventory is calculated by how many homes were sold in the past year versus how many homes are on the market. So when we see inventory slightly going up and we see the amount of sales happening going down, those two things are going to combine and amplify the amount of months of inventory we have. When looking at the 12-month average for months of inventory from November, we had an average of 1.02 months of inventory compared to December's 12-month average, when we moved up to 1.05. You can see the 12-month average of months of inventory is going up by about 2.3%, which once again doesn't sound very big, but if we see that for 12 consecutive months, that would equal an increase of about 32% for months of inventory. Like I said, the combined factor of inventory up and sales going down is going to make the months of inventory go up by quite a bit. Now notice 32% increase in months of inventory really does sound big, but remember, we're only sitting at about 1 month of inventory. So if we see a 32% increase, we're going from 1 month of inventory to 1.32 months of inventory, which really isn't a huge increase. Versus, let's say that our market had quite a bit more inventory of 5 months, and then if we saw a 32% increase in inventory, we would go from 5 to 6.6 months. But because inventory is already so low, seeing kind of a big increase of inventory really isn't going to change the market that drastically. But if that continues for a long period of time, it could. This is the occurrence that happened in a lot of other markets when we saw months of inventory so quickly escalate, and why a lot of real estate professionals only simply track inventory, but it's important to track months of inventory, comparing the amount of sales that are happening versus the inventory, so you can actually get a better assessment of the current demand and the competitiveness of the market. So we're seeing months of inventory going up by quite a bit percentage-wise, but because we're already starting out so low, it's not going to change the market that terribly much, but is moving up. So real quick, I'm going to leave you with a snapshot just to summarize what we're seeing. Once again, we're seeing home values continuing to tick up at about 8%. We're seeing months of inventory moving up, which is great for our market, as we've been experiencing extremely low inventory for quite a while. Days on market are remaining stable. And of course, we saw about a 5.5% decrease in the 12-month average, month over month, for the amount of homes being sold, as the market's adjusting to the new normal. That's our market update for this month. If I can be of help with anything else real estate related, don't hesitate to reach out to me, and we'll see you on the next one.